Hello everyone and welcome to this week's webinar. Am I excited for this one? We are going to go over the volume profile. Now, whether you're brand new to the concept or you've seen it before but you're not too sure on how to use it, in this video, by the end of this webinar, you're going to know exactly the ins and outs of it, how to use it to trade, how to use it for your price targets, and so much more. It even helps us find trend and market direction. So I'm going to give it a few more minutes for some people to join in. Then we're going to get into the volume profile webinar. What is it, how to trade volume profile, and some trading tips. I'm going to show you guys how to use different time frames, whether it's an hourly volume profile, an intraday volume profile, or even a weekly volume profile to find key levels that we look for support and resistance, and that we could look to take trades on or even look for direction for the next day. So let's get into it and I'll explain what the basics are. So what is volume profile? Volume profile is a charting tool that shows how much volume was traded at a specific price level. Now here's an example of the volume profile on the right hand side over here. Now, the first thing we see that's different from the traditional volume we're used to is it's not on the bottom of our chart because it's not based off time, it's based off of price. So as for this middle level here, 194,000 volume was traded at this price level. This is our highest volume shelf compared to the others, so this would be our point of control, and I'm going to get into that in the next few slides. And then after we cover the slides of information, I'm going to show you guys on some actual charts, gold, ES, and NASDAQ, some examples of the volume profile. So make sure you hit that like button. I hope you guys are ready. It organizes volume by price, not by time like standard volume bars, and this is very important because standard volume bars are good so we know how much volume was traded in that specific time period, but it doesn't tell us how much volume was traded at a particular price level, and that's what's very important for us as traders to be aware of. It highlights areas where buyers and sellers were most active, and it helps identify important price zones like support, resistance, and areas of interest. Now guys, if you're here from our community, you guys know me. I'm Kevin Dubrisky from Bullish Bears. I live trade every day with our community. You could join, the link is in the description. I also host Futures Fever on Benzinga on Wednesdays at 11:30 a.m. Eastern. You guys could join for a free chance to win an Apex Trader evaluation account. There's that little shameless plug. And now what are some key elements of the volume profile? So we have our point of control. Now, like I mentioned before, the point of control is going to be the price level at which the highest volume of trading activity occurred within a specific period. Over what period of time? It depends. So when we're looking at a point of control, it's going to depend on where we're looking at. Now later in this webinar, I'm going to show you guys a few different examples of volume profile because there are different ways to read it and understand it. You could put a fixed range volume profile on just one day's session, or you could do an anchored volume profile and link it up to a previous week so it shows you the ongoing volume. There's a few different tricks. I'm going to show you guys how I use them in my day trading. So VAH and VAL, this is our value area high and value area low. Now our value area, guys, is where 70% of our volume was traded within that volume profile. Now 70% is the typical, but most indicators, you are able to change the settings. You can maybe make it 60, 50, whatever helps in your situation. That's when you're always able to sort of move around with that. Now, volume shelf. What's a volume shelf? A volume shelf refers to a distinct price level or range of volume price on the volume profile chart where there's a noticeable increase in trading volume, right? So we have a strong volume shelf like this one right here, whereas this is a lower volume shelf. And again, guys, I'm going to show you guys examples of these very shortly and how you could use them as well. So key elements of the volume profile. So we have our low volume node. That's LVN, low volume node. Now, I mention these every day, guys. In my day trading, I'm always using some type of volume profile against our current session volume profile because that gives me an idea of where there might be an imbalance in buying and selling pressure. So a low volume node is the opposite of a volume shelf. It represents a price level or range on the volume profile chart with a relatively low trading volume. LVNs are areas where there's less trading interest and price may move more freely through them. So in the example I'm going to show you guys, it's going to be a NASDAQ on a weekly time frame with an anchored volume profile, and I'll show you right now real quick of an example. Here's our NASDAQ. Now this is our anchored volume profile. Now make sure you guys stick around because I'll show you exactly how I got it on my chart and what settings I used to. But right now, I'm just going to show you that right now it's placed down from, this is Sunday, April 27th, so the beginning of a week. And I saw that this was developing, this is now 2 weeks worth of information. Now if I pull my replay system, and what's great about the replay system with the volume profile on TradingView is it actually loads in while you're replaying it out. So let's go back to over here when we were breaking out of this range. So you see how we had a large area, this is our volume shelf, and we had our breakout. Well, now we created our low volume shelf. Now we're able to mark that out because on the higher time frame, I like to mark out these low volume shelves as areas of an imbalance, and usually sometimes a demand zone will form in there too. So I'm going to mark that out, and we'll make sure we extend our rectangle to the right, and I'm going to show you guys how the volume profile starts to develop. So more volume gets traded, more volume gets traded. We'll let a day go by. This is the 45-minute time frame. So boom, here's the next New York session. We see that volume was starting to consolidate at higher prices. What that means is that price and volume are accepting at higher levels. So we would be looking for an uptrend to continue. So because we have our range of 19,900 and about 20,250, we would look to go long at the bottom of our range and short the highs of the range. Now, because we're looking more for a bull trend, we would be looking to buy the lows. Now, as you'll see, every time we enter this low volume shelf, buyers are able to bring us back higher. We'll fast forward, it's still on at 7x, and again, these are 45-minute candles. So we dip into this low volume shelf, and what do we get when we come out of it, right? We see that price starts to accumulate, get larger, and buyers are still active. Our volume average is moving higher. We have a very large volume shelf. This is bullish sentiment. Now, what you can also do is you could use the fixed range volume profile, and you could put it from the start of a market open till the market close, and that'll give you that current session's high and low. Now, I'm not going to go over that one just yet. I do want to cover some more of the basics of what is the volume profile, and then we'll get into some real-time examples. That way, when you guys know the basics, it'll be a lot easier for you to understand the examples. So a high volume node, right? So opposite of a low volume node, low volume is almost like a no volume. So that's an imbalance, and a lot of times when the market retests that imbalance, it'll give us a quick rejection back the other direction. Now a high volume node is where we get a lot of that volume in range bound price action. In contrast to low volume nodes, high volume nodes are price levels or ranges with significant trading volume. High volume nodes indicate areas of consolidation where price has encountered strong buying or selling activity. So these high volume nodes happen when there's consolidation. Now, when there's consolidation in the market, consolidation mainly means for a long time, price remained within a range. So if we're going to remain within a range for a long time, volume's going to consolidate and get larger and give us that high volume node. Now, types of volume profiles. So there's a few, and like I mentioned earlier, fixed range, which analyzes volume over a selected period. Great for zooming into a specific move. We have our session volume profile, which shows volume profile for each trading session. And we have a composite volume, which displays volume data over a large time span. So that's like if you throw an indicator up on your chart for volume profile that automatically adjusts, right? So that's also the visible range that auto adjusts depending on which chart and time frame you have it up on. So volume shelf trading, right? There's a few different ways we could read this. The volume shelf shows us accumulation and distribution areas. Price tends to base and range near these shelves. So when we're trading within a consolidation point, our best bet is to be patient until we start to move out of it. Yo, what's going on, Sam? How's it going? Useful for identifying base then breakout opportunities. Now, when we find those areas of consolidation where we have high volume shelves starting to form and we start to move away from them, as long as our volume lines up on our subgraph too, which is our volume of our time, is breaking out, then we could look for us to continue. Let's see. All right, good stuff, guys. Make sure you hit that like button. If you have any questions on volume profile, drop it in the comments and I will get to them shortly. So volume profile shapes. Now, yes, there are actual shapes to be looking out for when it comes to volume profile. We have the D-shaped profile. Now, this shows us a balanced market, sort of mean revisions, which is a reversal, is more likely. Now, I'm going to show you an example of a D in a sense, right? Now, let's say for this example that we were looking at just this area over here. Now, I could do that because I'm going to pull our volume profile to right here because I know that from this is May 1st, Thursday, until this is May 6th, Tuesday, we were range bound for about 4 trading days. So I know while we were range bound in this consolidation point, if I put my volume profile, this is our anchored volume profile, so it starts on wherever I have it placed. So we'll start it on the 6 o'clock candle because that's when our new daily candle forms for futures. And we see we have, this is a D shape. Now, they call it a D shape because originally volume profiles used to be on the left-hand side. And if we were to draw it out, it does sort of, in a way, look like a D. I'll draw that out for you guys so you could see because it's flat there. And then it sort of comes along there, right? So it looks like a D. If it was on this side, it would just look like a D. Now that's when we have our points of consolidation, we're very range bound, and we're not looking like we're finding a good trend. Now once we're able to break higher, as you guys saw before when I moved the volume profile, when we move higher, we're able to get these low volume nodes. So these are very helpful, guys, because it's not just finding areas of interest, but it's also giving us an idea if we're trending or not. If I see that we're range bound and I pull my replay system to back over here, and I see that we have our D shape and we're consolidating, then guess what, guys? How we trade this kind of D shape is we buy the lows, we sell the highs, just like we would in any ranging market. Because whenever markets get up to these highs, we see that, look, this is our low volume shelf. Whenever we came up to this low volume shelf, we sold off right back to the low volume shelf that's to the downside. Low volume shelves could be bullish or bearish. Remember that, guys. Volume is volume, period. Bullish or bearish, we're just reading strictly the volume. Direction all matters on where we're above or below in price. So this would have been our high, this would have been our consolidation low. We see volume got lower over here, so we can mark that out as our low. And then again, this sort of gives us an idea of the highs and lows. Once markets start to move and develop and we start breaking above, we see that we got our strong break, but the volume didn't pick up, right? We didn't move higher with volume. We moved higher on a very quick wick. So we would follow that continuation and look for low volume shelves to form, because now guess what? Our old resistance is now becoming low volume shelf, new support. And that's exactly what we want to look for high probability setups. So again, we let this sort of develop and follow through, and as we see, the further we move away from it, the more volume that picks up to the buy side, right? Now again, this helps us in favor to the bulls that, hey, listen, we're not moving higher and then rejecting without volume. We're moving higher, consolidating volume, and creating good volume shelves. So this gives us support to our bullish bias. If we were moving higher and we saw all low volume shelves on this run up, then there would be a greater chance that we reverse and we don't move our way back up again. But because we were consolidating volume, picking up volume, when we see prices picking up while prices moving higher while volume's moving higher, we have to see that as price being accepted at those price levels. So again, we move into this area of support, this low volume shelf on the weekly or higher time frame, and we find support right within that. Now, another way we could do this is the fixed range volume profile. Now, this is a really great one for finding previous days ranges, levels, and zones. So let's delete some of these drawings here, and I'm going to show you guys an example of a fixed range volume profile. In fact, I had gold up on another chart. And then we'll actually, you know what, let's run through. I'm jumping around, guys. I do apologize about that. We'll run through, you know why I'm antsy to show you guys some great examples, but we'll run through the slides real quick. Make sure you guys are hitting that like button. I do appreciate all the support. So there's the D-shape profile, which I showed you guys before. There's the P-shape. Now you guys can sort of start to picture it a little better in your head. The P-shaped has a lot of our volume consolidated to the high end, while it has very low volume to the low end, right? It's squeezing, it's bullish imbalance to the buy side. B shape is the opposite, where a lot of the volumes to the downside, price did move higher, but volume did not move higher with it. And recognizing shapes helps anticipate next market move. So very important on that. The P-shaped profile, guys, indicates short covering. Do the low volume nodes always get hit? So I would find a setup to buy sell at the area. Yeah, so they get hit very frequently. So these low volume nodes, we have to think of them as imbalances in the market. Now when there's an imbalance in the order book, markets tend to reverse and hit them so markets could sort of stabilize, right? Think of it like a market structure in a whole. Our market has been here for years and years and hundreds of years. It's not going anywhere. It has to be balanced. Books have to be to a T. Institutions have to fill their orders where they have their orders set. And a lot of times we could take advantage of these volume profiles and volume shelves to find where their orders might have been resting and where they might have been consolidating. It's characterized by a thin lower tail and a bulky upper section. Again, this is the P-shaped volume profile, so this is more of a buyer volume profile. It's a bullish bias, suggests potential for continuation higher. Now, something I do want to mention with the P-shaped, and I'm also going to mention with the B-shaped too, is that they have to close. Now, if it's a P-shaped, it would have to close above the 50% mark, right? So I wouldn't want to see a P-shaped but price close below it, because that tells me even though volume started to pick up with price, it failed and they weren't able to successfully hold it. And when buyers fail, that means sellers are starting to take control and vice versa, right? So as for the B shape, this is a sign of long liquidation. Buyers exit long positions, causing price to sell off. And we get a lot of volume to the downside. Whenever price is more towards the downside, price is accepting at lower levels, we should look for downward continuation. D-shaped profile, I mentioned this before as well. This is more of a neutral or range bound, where we would look to find low volume shelves to the buy side or sell side and sort of trade that range, right? Take those fake outs instead of breakouts, where other traders might be looking for us to break out of that range. We have the knowledge, because of the volume profile, that we should end up trading this range. So before taking that breakout to the buy side, take that breakout short to the downside and trade it back in the right direction. If markets are ranging 80% of the time, it's up to us as traders to take advantage of that and trade that range. Volume profile on different time frames. Guys, I'm super excited to get into the examples of this, because volume profile really is probably one of the best strategies that I could recommend to people who are either just beginning, who are trying to find some common grounds, find some consistency. Volume profile, something even like the orb, which orb has nothing to do with volume, but volume profile is fantastic because it's not that subjective. You put your volume profile out there and it gives you your levels, it gives you your information, and you can't give it any ifs, ands, or buts, because it's giving you the information. You have no say about it. Now, volume profile on different time frames, we want to use sort of composite profiles, higher time frame profiles for weekly and monthly to find those major areas of buying and selling. If we want, we could apply session profiles for intraday structure. So if I was trading gold on Tuesday, I would want to see gold on Monday. I would want to see its volume profile. Where did we have low volume? Where did we have our point of control? And then I would want to see where gold is opening up that next day in relation to those price levels, so I could know direction and which price level I might want to enter at. Drill down with fixed range profiles during key moves or setup. So again, guys, that fixed range volume profile is pretty helpful because we could put it on a specific range instead of the whole chart. So if I see a move happened on middle of the week last week and I'm curious on the volume of just that move, we could use our fixed range volume profile and get that information. Multiple time frame volume profile analysis improves trade precision. Guys, super important. Don't just throw the volume profile on weekly time frame and have one zone and call it a day. Follow the volume. If you're sticking with the volume profile, you're implementing this concept into your trading, then stick with it, stay with it, and go all board, right? You do not want to half blank anything. You want to be 100% with it, and you want to stay forward and back testing with it. Now, if you're starting with the volume profile, guys, I'd recommend giving it a full month, right? Now, give it a full month where every morning you're waking up and you're doing your breakdown. I'll show you guys an example of how you could do a pre-market analysis with the volume profile. So breakout versus range trading, it's great. Again, I mentioned earlier, volume profile is fantastic because it helps us find the breakout trades and it helps us find the range trades. If we see those P shapes or B shapes, we could expect a breakout. If we're seeing that D shape where it's very range bound, then we could expect a range bound. volume profile supports both styles, which is fantastic. Now guys, some common mistakes with the volume profile is focusing only on point of control without context. So a lot of people will say, hey Kevin, I was using volume profile and let's see, where's a good example? We'll pull up ES right here. So I have a few mapped out. These are a few fixed range volume profiles on daily time frames, right? So we see that this one was sort of a D shape, but point of control was moving lower. This one was a P shape, but check it out, P shaped, but price ended up closing below that 50%. So what happened? We ended up using that point of control from Wednesday as a key level going into Thursday. We used it as resistance to push lower. Now, the next day, this is now Thursday, we created this key level. We were very range bound. This is a perfect example of that D pattern that I mentioned. Check this out. I'll show you exactly what I mean. We have, let's see, brush, I suppose. We have just like a D, right? So it's not low volume down here. There's no low volume up here. It's just the volume is range bound. Price was range bound. That's it. So what we could do then is we could mark out this point of control and say, okay, well then I'm going to be using this point of control as a potential target because the next day we opened up below this range. Look at this. Market opens up the next day 6 o'clock because it's futures markets and it opens below this whole entire range and continues lower. Now what that tells me is imbalance. We mentioned imbalances earlier. This imbalance up here, because there was volume traded in this area, this needs to be retested. Now, it wasn't retested the following day. We ended up continuing the next day to the downside for a little bit. It ended up retesting that level the following day. Now, when it comes to point of control, volume profile, we don't have an exact... It has to hit point of control today from yesterday, or else there's no real trade. There is no have to in trading at all at any point. What there has to be is some type of preparation by us so that when the market does come to our price levels, we know how to successfully take our trades. So something I would see on this one is, check it out, we sold off, we had our sell-off from the market opened, but we ended up closing near that 50%, right? We closed above our point of control. It looks like price was trying to reverse. Now, the next day, we don't trade the New York session until New York session opens. So these light blue areas, this is the overnight session. The darker blue areas, this is the New York session. So this is when we're trading. So at this point, the New York session, we were opening above our P shape. So look at our P shape down here. We were opening above our P shape, opening in this volume imbalance, and we were heading towards that previous day's point of control. So again, guys, this would have been a fantastic long entry to try to target that point of control. Now, we would use something like Bookmap or some other forms of order flow to find these entries. In fact, I do have Bookmap up right here because I wanted to show you guys an example of volume profile with Bookmap. Now, guys, if you're part of the community, you know I use Bookmap every single day, all the time. All my entries, I gotta use Bookmap because it's a fantastic tool for order flow. Now, with that being said, I also use the session volume profile on Bookmap. Again, volume profile giving me an idea of buying and selling. Now, I have session volume profile here. This yellow line is our point of control. And this one, this SVD, this is the same as the SVP, but I have the delta turned on. So at these price levels where we had 3,635 lots, this was negative 376 delta. So on the right hand side, it tells me, do we have positive or negative delta? And in this middle part, it shows me our volume shelf. So something we recognize in this example is we have our D pattern because there's no obvious low volume shelf anywhere. It's just all big volume. So at this point, what's happening is the market tries to break lower. Now, the example I'm showing you here is a passive buyer down here on Bookmap on the ES around this 56.95, and what you'll see is price will try to break through it, and it will hold it as resistance. Now we see volume and price, we're trying to break below it, but volume is not picking up along with price. So we would look for a reversal with this support, and once we're able to see a big buy bubble, now again, this is a bookmap example, we would be able to find support. We'd be able to target that point of control because we're looking for a range-bound price action. So we would look to buy the lows, sell the highs. Now, let's say this example, we were to the buy side near that 57.10. I have no idea. This is just a replay mode. Let's see how we react up there. Oh, well, at this, 57.10. That was the high of that volume profile, and we ended up reversing since then. I fast-forwarded a little too soon, but before I could even look at it, guys, it was exactly what we were looking at. It reversed when price tried to move higher. So here's 10.08, and we'll bring us back to 10.08, and we'll see how price moves off of that 57.07. So again, look at this point of control. This is our largest volume. Point of control is right here. We try to move higher. We have a passive seller that we see on bookmap with this red level. And every time we try to move higher, volume does not pick up. We end up reversing. We end up getting a very strong reversal at some point here. So really important to use volume. Volume moves the market, guys. There would be no market without volume. There's billions and billions, sometimes trillions of dollars being moved throughout the market every single day. There's going to be volume. If there's not, that's when we should start to worry, right? So here's that break lower, and something I would see here, guys, is I see that we have a lot of positive buyers on the buy side on our volume profile delta, but they failed. We had a lot of buyers, but volume didn't pick up with those buyers. So that's a big red flag that this breakout was a fake out. And that's exactly what we ended up getting. We got a strong move to the downside. A lot of selling pressure ends up stepping in here, and we end up moving lower. Now let's get some examples going of the volume profile. Again, if you guys have any questions at all, please let me know. Feel free to let me know in the comments, and I will get to them shortly. I want to cover gold now. Gold is another fantastic instrument to trade when it comes to futures, or if you're trading forex, XAU, USD as well. Now gold, again, I have some points of control, some volume profiles here, and some examples. So this first example, we see this one was on April 29th, Tuesday, and we have our P-shaped. Now, again, this is a failed P-shape because guess what? We have our point of control up here, we have our P-shape over here, and we can mark out our high where the top part of the P is, right there, and we see that, look, when the market closed, we closed below that 50%, we closed below that P formation, which would then lead me in a bit more of a bearish bias for that following day, and that's sort of what we got as well. Now again, this is the opposite. Now the following day, we got a failed B formation, where we sold off overnight. We had a market imbalance right here, and I'm going to zoom in to show you guys that imbalance. We see this low volume area. This would be our new market imbalance, and we'll mark that out as blue. Mark it out with our box so we could extend it. And check that out. That area of market imbalance or low volume worked as a really strong area of resistance that following day, right? And we saw price consolidated, and every time it tried to break out of this 3273.10 on gold, volume did not pick up with it, and we ended up failing. Now we see that overnight, this next session, actually check this out. So this session where we ended up rejecting that price level, it seems as though, so we had our P shape, we tried to close below, but remember volume was still moving higher, we had our point of control, and we could use our point of control from previous day every day to sort of get an idea. So let's look back at these other examples and just mark them out real quick, again, just to sort of see where we're at. So we have point of control here. This was Wednesday going into Thursday. We opened below it. What happened? We sold off and we were range bound. Following day, we have our point of control right here now. Oh, actually right here. And check this out. Our point of control from, this is Thursday into Friday. Well, guess what? We hit that volume imbalance from Thursday, from Thursday's volume profile. And then we rejected it. Went right to our point of control. So the two major levels, guys, that I would always recommend keeping an eye on is the low volume areas. Now, when I say low, I don't mean like debatable low. I mean extremely low, obviously low. These are obviously low levels. This is where a lot of imbalances tend to be, and when markets move into those imbalances, that's when those orders get filled again. So if this was a sell-off right here, and there's an imbalance of low volume right in here, the next time markets move into that, those sellers that weren't able to get filled the first time are going to start to consolidate and fill, and that's exactly what we like to look for, guys. Make sure you're hitting that like button, hit that subscribe button. I go live Monday and Friday for free on YouTube, and Monday through Friday for our community at bullishbears.com. Feel free to join, guys, and join me Wednesdays for Futures Fever on Benzinga. And anybody looking for one-on-one sessions, always feel free to shoot me a message at tradingpioneers.net. That is my coaching website. Alrighty, so let's take another quick stab here, and we're looking at, now here's a great example of a successful P-shape, and this is on gold now, still on gold. This is now Sunday's price action, and we have our P-shape. I'm going to draw it out real quick just so you guys can visualize it. We have our P right here. We have most of our volume in this area right here, and we ended up closing above or within our P. Hey, what's going on, Fairchild? Hope you're having a good weekend, man. Absolutely. So look, we have our P shape right here, volume to the upside, and we closed near the highs of that P shape, near the highs of the volume. So we look for continuation that next day, and that's exactly what we got. We got strong continuation. We opened above this whole day's entire range, and we ended up continuing. Now this trading day, check this out. This is now Tuesday. Tuesday we did have continuation. It was a bullish day, and look, we'll even throw the replay system on here, and I'll show you guys something. So let's see, check this out, right? Let's say we were looking at this, we don't have that next day, and we're just looking at gold. We have no volume profile, we have no information whatsoever. This looks so bullish, we're going to continue. But guess what? Now I want to throw my fixed range volume profile, and we're going to come over to our left hand side where our toolbar is. We're going to click the projection one, and we're going to come down to fixed range volume profile. And now because we're on the futures, this is 23-hour markets, I'm going to come over to the previous day, 6 p.m. Eastern open, and then the 4:30 candle close because I'm on the 45-minute time frame. I'm going to click it, and now I get more information. Before I was thinking, wow, we're so bullish, we're closing higher. But that's the opposite of what's going on. We were pushing higher, we closed higher, but look at what the volume's telling us. Volume's telling me that this isn't going to live. This is not going to make it. There's no success, there's no acceptance at these price levels. Volume doesn't match price. We're going to fail. Price and volume should always be matching. If we're in a downtrend, volume should be increasing to the downside, and we should have that selling pressure. If we're in an uptrend, we should have that buying pressure. Once we see something like this where volume starts to fade, that's a major red flag. Now check out how the next trading day we opened at those highs and we had a huge drop. And then we ended up consolidating for this whole next day, it seems, within this point of control, right? So here's our point of control price level right here. And we're going to mark that out and drag it to the right. And we see that when we're dancing around our point of control, we get very weak and poor price action. So something else, guys, I want to sort of recommend and advise is to be careful when price is opening or trading near a point of control. If we're already near that point of control and we're not coming to it for a retest, there's a good chance we're going to be range bound and consolidate. Whereas if we're moving away from point of controls, you see how this is Thursday, point of control was at 32.34, then Friday it was at 32.65, Monday it was at 33.22. Point of control was moving higher day in, day out, day in, day out. So with that going on, that's giving me the trend of the market on gold with the point of control, with the volume profile, with the fixed range daily volume profiles. Guys, make sure you run that like button up. I do want to see that hit higher and higher and higher, so make sure you run that up. I do appreciate it. Now, something I do want to show you guys too is you could also use it on the daily time frame. Now, let's delete these for now, and then we'll go over the daily time frame. And again, any questions, guys, please feel free to let me know. My goal of this was to help you guys understand the volume profile from whether you understand nothing about it to now understanding every little concept about it. I have a question. When we mark it on the chart in real time, do we have to keep sliding it over, or do we keep set for the past price action? Sam, fantastic question. I'm actually going to put these back on the chart, and we're going to go back and answer that question. So it's really going to depend, right? So let's say, right, this is our daily session from yesterday. So I'm not going to put this session until I have the sessions closed. So now what I would do is I would look at, okay, where's our point of control? Right, our point of control was over here. Where is our range? Our range was within these blue levels. You guys see these blue levels that are forming? This is our developing volume average. Now, the developing volume average shows us developing where 70% of the volume was traded. So when we're moving higher and volume moves higher, this will move higher with it. If we're moving higher, as we see up here, and volume doesn't increase, well, then our volume average isn't going anywhere. And that's another great example and great way to use the volume profile to our advantage to spot those fake outs. And look at this, guys. Point of control from Tuesday rejected 1, 2, 3 times Wednesday. Great ceiling on that market on gold. Now, back to Sam's question. He wanted to know, when you're trading, when we're intraday trading, I'm really trading real time, where's my point of control? Where's my volume profile? Great question, Sam. Well, let's say market opens up here. It is Wednesday. It is 10:30's coming around. Market's been open for about an hour. There's a couple things you could do. Now, the fixed range volume profile, you could mark it out from our 6 o'clock open, and then you could bring it down to wherever we are. Now, the fixed range, that one you would have to keep dragging. Yes, that one you'd have to keep dragging. But the anchored volume profile, that one you would place, and then it's anchored. So it's constantly updating with price and time. Hey, absolutely. SN, I appreciate it. Yo, my pleasure, guys. Always doing what I can do to help you guys. So let's see. What was I doing? Oh, man. Lost my train of thought. Oh, yes. I was going over the anchored volume profile, right? So you would use the anchored volume profile for that current trading day, so you could see it develop throughout the day. Now let's say we want to replay, do our select bar, and we come over here on the ES. Now just remember, this is the one from yesterday, this is the one from today. And it's helpful because guess what? The one from yesterday is lined up on our left-hand side. The one that's developing is on our right. Now, I do want to show you guys a trick with this tool. Now, the volume profile, I always keep it up on a weekly time frame, but I only keep it visible on the 45-minute time frame, and I'll tell you why. Because when I'm trading, and let's go to the ES, the regular ES, this is my ES chart that I use. When we're on the 45-minute time frame, I want to make sure it's visible so I could see it, because I want to know higher time frame-wise, where's our large areas of support, resistance, and low volume shelves. Now, if I'm day trading and I'm on the 5-minute and I have that big blue thing up, it's going to cover my whole screen. I'm not going to be able to see it. So on the 5-minute, the 15-minute, 30-minute, hourly, every time frame, we can't see it. But when I come back to my 45-minute, there it is. Now, to do this, guys, you're going to double click on that volume profile and you're going to come over to visibility. Now, this works on all tools and indicators on TradingView. So I have it set for my VWAP too. VWAP's only visible on the 5-minute time frame for me. So here's our volume profile. This is our anchored volume profile tool. Now I have minutes ranged between 31 minutes and 47 minutes because I don't have a 31-minute time frame. I have a 30-minute time frame, a 45-minute time frame, and an hourly time frame. So when I go over to the 45, which falls between this range, it's visible. If I'm out of that range, it's not. Fantastic trick. Super helpful, because then guess what? If we're intraday trading and I want to zoom out real quick and check that volume profile, I could check it without having to add it to my chart, delete it from my chart, and go back and forth. Super helpful. TradingView makes everything so much easier for us. Guys, I'm going to be wrapping up this stream in just a little bit. Make sure you hit that like button if you haven't yet. Join our community at bullishbears.com to join us every day. We'll go live every day for our community, whether we trade gold, oil, ES, and Q. I always try to make sure that we have some good trade setup that we're looking for. Now, I did tell you guys that I wanted to do a higher time frame analysis portion of this session, so I will. and we'll go over sort of how you could find maybe higher time frame volume profiles and go down from there. Now, I mentioned before that I like to look at the volume profile on maybe like a weekly volume profile, but I look at it on the 45-minute time frame. Now, I call it a weekly volume profile because I'll start it out on a Sunday. So, futures market opens Sunday at 6 p.m. Eastern. That's when I'm going to start my futures my volume profile. So, let's go back to a Sunday. So, here's Monday's price action, and then here is Sunday overnight. Here is our 6 p.m. candle. Right there. Now here's our volume profile on gold starting from May 4th and May 5th, right? So May 5th was Monday. Now here's our volume profile. Now I see this looks like a D shape, right? Now what do we know about the D shape volume profile? Range bound. We do not want to touch this, guys. This is a no trade zone. If anything, I see that we have a high volume shelf here, a high volume shelf here, and I see that we're very range bound. This is a no trade zone for me. I might look into something like, let's say, the ES, right? Now ES, same situation at the moment. Now ES on a daily time frame, guys, we're in a major area of resistance, and because we've been range bound now for, let's see, 3, 6, 7 trading days in a row, and we see that because price failed to continue lower and it failed to continue higher, this would be our volume and this would be our range, and if we put our anchored volume profile, we'll get that D pattern. Now, if we put our anchored volume profile all the way down here before the trend started, we'll probably see, right, it looks more like a P pattern. So it always depends on where you put that volume profile as well. And that's why it's also important to use it on different time frames too. Make sure you have a higher time frame volume profile for these areas like this. We could even put this all the way back here and see, okay, well, check this out. Now this sort of changes some stuff up for me. Our volume average has been up here this whole time, even though we sold off below it. Now we're finally back within it range bound. And something I do want to point out too, guys, at this point in the market, as long as ES remains above that 5,600 level, we are only less than 10% away from those all-time highs. 10% to the downside, it would still require, yeah, about 10-11% move to the upside. So it's possible, guys, if we're able to break above 57.75, we might be back in a bull market. Gonna have to really see. We had a real strong bounce. We were down as much as 22% from those all-time highs. Really, really wild stuff, guys. Great time to be a trader. Great time to learn. Great time to take advantage, guys. Now, I see a lot of volume consolidating at this point, and I could have told you there was volume consolidating at this point before even looking at this because, and we'll turn the drawings off, look at this area. Price was in this area for about, let's see, since March 10th till about April 2nd. For almost a full month, price was range bound. So I know that if we marked out a fixed range volume profile between here and here, it's going to be a D shape because it was consolidating. Alright guys, I do hope this webinar helped you guys. If anybody does have any last minute questions on volume profile, please let me know. So common mistakes real quick, only focusing on point of control. There is way more to it. Volume profile is not just point of control, low volume nodes. These are all major levels to keep an eye on. Ignoring profile shapes and volume node structure. Guys, don't ignore it. If it's on your chart, read it, do your analysis, and stick to it. Complicating VP is a guide. There's no perfect strategy. Don't expect it to hit 100% of the time. Don't be too subjective or hard on yourself if you take a trade with it and it doesn't work the first time. It's a strategy, it's a system, and it takes some time, effort, and dedication to work that system out in your favor. And you also have to remember it's not just volume profile, it's about market structure in a whole. If we're really bullish, there's a lot of bullish sentiment, but volume profile was looking a little bearish, then maybe be a little more patient on your trade and wait for something to show in your favor. If you're getting a little skeptical on your trade setup and you're getting 50-50 on it, don't take the trade because we're traders, we're not gamblers. Live Tuesday, Friday this week. Should be Monday, Friday, unless Monday is a holiday. Let's see. Nope. Be live Monday and Friday this week. I'll probably do an extra pre-market prep as well live on the YouTube, guys. So make sure you guys check that out too. That's between like 8:30 to 9:15, and then I go live for the community for another 2 hours after that. Guys, join our live trading community, bullishbears.com. I live trade every day in there from 8:30 to 11. Yeah, no, I got you, Sam. No problem. No problem. Join our community. Guys, follow me on Instagram is kevin.futures. I'm always posting videos on what's going on in the economy. I do a lot of work with bullish bears, a lot of work with Benzinga. Always trying to give you guys the best information when it comes to trading and just the economy in a whole. Do a lot of interviews with CEOs, a whole lot of fun stuff, guys. So make sure you keep up. I'm going to see you guys on Monday. Take care. Hit that like and subscribe, and I'll see you guys in our community.